Okay, so the market still up 37, 38 odd points. IT, I mean, actually the IT index, if anything, is perked up a little bit more. It's up almost a full 1%. So that is the space which is holding up things. I think the Bank Nifty has also come up a little bit more. It's at the day's high at 27,684. Actually, no, 27,684 is the high. We're at about 27,608, so it's a little bit still off the highs. Manisha is here with a quick check on what is moving as far as the commodities space is concerned. Manisha, morning.
Thank you so much for that, Prashant. What a run-up in crude oil prices. We are at $50 for the US crude and almost $60 now for the Brent prices. So what a comeback for the prices here. We are up nearly 16% from the December lows, from the Christmas Eve actually, when we saw the prices trade at a $42 per barrel, and we are holding at 50.5 right now for the US crude itself. This is the longest rally in last 17 months that we have seen come in for the crude oil prices. And there are a lot of positives, starting right from the OPEC and the allies output cut. Saudi Arabia is saying that it is going to export less than what it had agreed in the agreement. And also you are looking at the US-China talks progressing well into its third straight day, the weakness in US dollar. So all of that really seems to be taking the prices on where they are. Sushant Gupta of Wood Mackenzie now joins us to talk further about that. Sushant, hi, good to have you on the show. What has been your reading in what we've seen in last 10 days or 10 trading sessions in the crude oil prices? A near 16% of a jump. How would you really, how would you really argue that?
Yeah, no, thanks for having us here. And we actually stated that, to our clients that oil price volatility will be the key aspect for 2019 because of a lot of uncertainties. And this is what happens with a small positive news coming in either from the supply side or from the demand side can easily move prices, $3, $4, $5 per barrel within a short span of time. Now, as you rightly pointed out, the two key factors which have moved the markets are that Saudi Arabia particularly is very positive and organizing the OPEC cut starting January this month. So markets are receiving that very positively. And Saudi Arabia stating that they will probably overcut or based on whatever they've agreed in the December agreement. Russia has shown positive news that they will cut production, but again, that will be more gradual. So as we see in market guessing that or getting the message that the OPEC production cuts are real and they will start coming in from January, that is a good news from the oversupply perspective. We'll start to see a gradual reduction.
Sure.
The other point is around.
Yeah. But Sushant, would you say all of this has been factored into the prices now? I mean, all the fundamentals, or do you think there still is further run-up in prices that you're expecting?
Well, not a lot. Our first half 2019 average forecast for Brent oil prices is roughly around $62 to $63 per barrel based on our market fundamentals on the supply and demand side. Now, so we don't expect a big upside into the prices. So averaging around 60 to 63. Now, the biggest uncertainty around this is the U.S.-China trade talks, which are currently ongoing. Now, with the U.S. President tweeting that the talks are going very well, it has definitely sent a good message to the market, and markets are reacting to that. Now, if the trade talks, fall over and the dispute escalates, then potentially we could see a big downside risk to the economic growth in U.S. and China and the oil demand particularly, which again is a big downside risk to the oil prices. We might see oil prices, going back to again, below $55 per barrel if some of these talks do not are not resolved.
Prashant, Sushant, what is your sense now on the Indian demand really? Because there have been concerns, of course, about the demand growth from Asia into 2019. India, the fastest growing economy, the fastest demand growth that we have seen for last few years. What is 2019 really putting forth?
So India has shown a good show in 2018. The oil demand grew by roughly around 245,000 barrels per day. Now, for this year, we expect oil demand to continue growing at a similar pace, adding in another 250,000 barrels per day for 2019. And particularly, the growth is coming from transport fuels, gasoline, diesel, residential LPG, with the huge growth in the connections for LPG. So India is really a shining star in all the bleak news around the economic growth and oil demand, which we're hearing from other economies, particularly China. And interestingly, we see the India adding around 250,000 barrels per day this year is actually exceeding the growth which we see in China for this year. So India's demand growth could be higher than China, for the first time in this year.
So, Shant, one more question before I let you go. I remember last time you spoke, you had said that the India dependence on outside crude is only expected to grow much higher. Do you stick by that report? I mean, I assume we are around 82 to 85% of import dependence right now. Are you still on that number?
Yeah, I think, in fact, this is going to grow, right? I mean, as I was saying, oil dependency in India is only going to grow with the huge growth in oil demand, which we expect in the medium to longer term. They will need to import more crude because the domestic production is not going to add a whole lot of oil barrels into the market. So their dependency could potentially reach close to 90% in the medium term.
So, Shant, one final question. You've said $63 to $65 a barrel of a Brent average in the first half of 2019. For the whole year, what's your sense? 62 to 63. Okay. And for the whole year?
Roughly around $65 per barrel for 2019.
All right, so Shant, we'll let you go at that. That's a word coming in from Wood Mackenzie that the Indian growth will continue to outpace China for 2019, and $65 per barrel as an average for Brent is what they're watching out for.
Okay, all right, Manisha. Thanks very much for that. So $65 could be one of the targets coming in there for Brent crude, currently just at the cusp of 60.